Good afternoon, traders and investors. Will back here with another one. Hopefully, all of you are having a very beautiful weekend so far. And it's that time of the week again, guys, where we go over the top 5 options plays for the upcoming week. Now, keep in mind, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. Now, the wheel strategy is extremely simple, guys. Whether you're a beginner, intermediate, or even advanced investor, it allows us to collect premium on some of our favorite stocks on a weekly basis without taking too much risk on. So in today's video, guys, I have a few things prepared for you, of course. Number one, we are going to go over a little bit of a setup for the week in hand, and that is going to be going over a few of the macro events that we have this week and a little bit of technical analysis in the markets to just set the tone to where we could possibly expect to go over the course of the week. Number two, we're going to go over the strategy rules for writing these put options. Now, not going to spend too much time on them, guys, but I do this every single week just to kind of explain the strategy and what we're looking for here. And then number three, of course, we're going to go over the top 5 options plays for the upcoming week. And as per usual, I do have a lot of bonus plays for you guys as well. So a lot to cover in today's video, guys. Let's jump right into the action. So in terms of the expectations for the week, in terms of the macro, as we can see right here in the early portion of the week, Monday through Wednesday, we have a bunch of Federal Reserve speakers. Now, I do not expect anything major out of them. I largely expect them to be in line with what Jerome Powell has been saying over the past 2-3 weeks, that they will remain data dependent and probably won't be commenting too much on the pace of rate cuts. They're probably not going to say anything about an accelerated path or a slowing down of the path. I expect them to be right down there in the middle and remain data dependent. The biggest day, of course, is going to be the Thursday session where we get the CPI, the inflation report for consumers, and the expectation is coming down to about 2.3%, down from last month's read of about 2.5. Not expecting too many large surprises here, guys, right? We know the economy is slowing down. Consumers are a little bit tapped for purchasing power right now, so I don't really see any catalysts for a major resurgence in inflation at the current time. This is probably going to be the biggest day of the week, but until then, it's pretty much going to be smooth sailing. Now, in terms of your technical analysis, well, we know that the bulls are looking very good. On the SPY, guys, they control all of the higher time frames, right? Not only do they control this gorgeous monthly uptrend, they also control this beautiful weekly uptrend too. And just most recently, we have tapped into our support zones, the prior all-time highs, and now looking good for a potential second leg or third leg, rather, if you measure from here, in terms of some nice daily trend expansion. And the QQs are looking largely the same, right? Beautiful legs of expansion in motion, reacting nicely from our support zone and just looking to push the markets a little bit higher, possibly into the early portion of the week until we get into our volatility event for the Thursday session. So all in all, guys, the markets are looking fairly good. The bulls control all the higher time frames, and there are no red flags in terms of the short-term time frames either. So not too bad. In terms of your earnings calendar, well, we don't have a very big week of earnings, but earnings season is definitely starting. On the Tuesday session, we get Pepsi, which is going to be a big one. And then on the Thursday session, we get a few more, right? Delta Airlines, Domino's Pizza. The biggest day of the week, however, is going to be our Friday session, where we start getting earnings from JP Morgan, Wells Fargo, and BlackRock. The rest of your banks reporting next week on the Tuesday session. So interesting, going to be very interesting for the banks this week on Friday, but really not much until then. Could be some nice opportunities, though. If ever we have some earnings dips on these companies, we will be looking to buy. And I've included a few of those in our bonus plays for the end of the week, right? So before we get into the top 5 options plays, guys, let's go over a few of the strategy rules right here for the put wheel and what we're looking to do, right? So in terms of writing put options, guys, as part of the larger wheel strategy, very easy strategy, guys. What selling a put is, just think of it as a buy limit order that pays you. So let's take a look at Google right here. Let's say we wanted to buy some shares of Google in this lower range down here, roughly around the 162 range. Let's say we wanted to buy 100 shares. There's two ways of doing that, right? Either we can just set a buy limit order here for 100 shares, and if it doesn't get filled and the market just runs away, we don't end up with any shares, we don't end up with any profit. That is where selling a put comes in. Selling a put is exactly like a buy limit order. If we were to write some one Google put down here and agree to buy the shares if it ends under the strike, let me just show you what happens at that current time, right? So let's say we want to write some puts on Google at roughly the 162.5 strike. Well, we would write this option, right? We would be willing to buy Google shares at 162.50 in the event the stock falls below this price on the Friday session. Now, what do we get for putting that buy limit order in the market at 162.5 using a short put? Well, we get about $80 for that contract, right? So in the event that Google ends above 162.5 by the Friday session, we get to pocket $80. And that is pretty much the end of the trade. In the event Google falls below 162.5 by Friday, well, we still get to keep the $80. It reduces our average cost by about 79 or 80 cents per share, right? And we get to pick up the shares at a little bit of a discount. And thereafter, guys, we're going to be looking to then sell covered calls above or at our strike price and generate even more premium. So it's a very, very easy strategy, guys. We're basically using selling puts to get into a trade. And if ever we get assigned the shares, we're going to be writing covered calls to get out of the trade. So this is your buy limit order and this is your sell limit order, right? Very, very, very easy strategy. So let me explain a few of the strategy rules. And we're going to spend a very brief amount of time on this, probably about 3-4 minutes. If you haven't seen my 30-minute video explaining this strategy in detail, how I pick my stocks, how I pick my strikes, and just more of an in-depth explanation, I'll leave the link to the video in the top right corner of this video right now, and also down below in the description. So definitely check that one out because I'm not going to be spending too much time on these today. Just a quick little recap, right? So number one rule for selling puts, guys, always, always, always write puts on a solid company. Only ever write puts on a company that you want to own at the strike price where you want to own it. This is just for high conviction trades, right? The last thing you want to have is being assigned some shares on a company that you do not have high conviction in. It just makes managing the position a little bit emotionally and mentally cumbersome, right? So keep it to solid companies and high conviction plays for you. Number two, we want to be targeting stocks that are in a monthly uptrend, such as this, or at least in a long-term range. That helps better our odds that in the event we do get assigned, at least we're targeting a stock that's in a long-term uptrend, so we know the bulls are behind us, right? And long-term support ranges are the same thing. We know if we're writing puts at support levels, the chances are that we do get some bids down there and the stock price will move higher. Number three, we do not want to be writing any puts on stocks that have earnings this week. Earnings can be a very, very volatile event, and you've seen in the past 3 to 6 months, sometimes the earnings expectations are for about 5% up or down, and sometimes they go down 10, 15, 20% and just blow past all of our strike prices, right? So if you want to stay perfectly in line with this strategy, do not write any puts on stocks that have earnings this week, guys. It's a very volatile event and you don't want to end up with any outsized losses, right? Number four, we want to be writing stocks that are in an area of support or a breakout retest area. I bring up this chart every single week. Very, very simply, guys, a big area of support for a stock can be something like an Autodesk down here, right? So let's pull up the chart. In terms of some Autodesk, you can see this was a 1.5 year range. So writing puts in this support area down here is usually a very profitable endeavor because we know we have a lot of support from our long-term bulls. The breakout retest is this. See the breakout of the top end of this range right here, breakout, retest the top end of the range and run. Usually this retest area is a very high probability setup. So you'll see that most of all my setups respect one of those two criteria, guys. They're either in a big area of support or a breakout retest formation. Now, these two next points go hand in hand. We want to be writing at or lower than the expected move, and we want to be writing these puts on a red or a flat day. If you don't know what the expected move on a stock is in a given week, guys, you can go to this free website, optionsai.com. Just type it out in Google, Options AI expected move, and you'll land on this very same page. And as we can see right here, we have Charles Schwab pulled up for the week. You can see the expected move is about 2.5% up or down. So we want to be targeting to write puts under the expected move to the downside. So under 63.11 in the case of Charles Schwab would be a good trade. Now, when we couple that with writing on a red or flat day, it stands to argue, guys, if we're writing on a red or flat day, the stock will be pulling down into the expected move, and we'll be able to write puts under the expected move as a matter of fact. Now, this is good because usually when we come under the expected move quickly in the early portion of the week, we get a little bit of mean reversion to the upside, which brings us back into the expected move, right? So if we can really get some of those short puts off when the stock is pulling back into the expected move, usually by the midpoint of the week, we get a little bit of a buying opportunity, a little bit of a mean reversion, right? A little bit of a bid from the bulls to the upside, and usually allows us to get out of the trade. So the next rule right here is our ROI. So we want want to be writing put options between 0.5% and 0.75% in the weekly premium. This is how you know if you're getting a good bang for your buck or not. So what do I mean by 0.5% in weekly premium? Well, very simply, guys, that is just the amount that you're getting on the bid right here for writing these put options versus the amount of capital we have to outlay. So as you can see right here, 0.8 divided by 162.5 is roughly 0.5%. So that is how you can do some, go through these options chains very quickly by doing some mental math. Just look for 0.5%. If you want to know what 0.5% is, it's literally basically half of the strike price in cent increments. So like half of 160 is 80. Everybody knows that. So for this trade to be worth it, you need to see at least 80 cents on this bid right here. It's a very quick mental math way to do it, that you can go through a lot of these options chains very quickly and determine whether or not the strike price that you're looking at respects a decent amount of premium. Now, the reason we choose this, guys, is in the last 6-7 years that I've been running this strategy, it is the best bang for your buck location. We don't have a very high risk of assignment, but we're also getting paid quite handsomely for the capital that we're outlaying. And I'll remind you, if we're always making between 0.5% and 0.75% on a weekly basis, your annualized ROI should be anywhere between roughly 25 and 35% ROI. That is without any compounding, right? And that is roughly a 2-to-1 performance over the average performance of the S&P 500. So we're not going for the home runs here, guys. Just looking to stack premium in a consistent way and beat the indexes over time. And then lastly, we want to set a take profit order at 90% of the contract value. The beautiful thing of this strategy, guys, is that it's really passive. You really only need about, let's call it about 20-30 minutes of maybe looking for plays on a Monday and Tuesday morning, and then you just let them ride until the week finishes on the Friday session. So taking profit at 90% of the contract value in the event that one of your trades goes really well, and by Tuesday afternoon, let's say you write them on a Monday morning, and by Tuesday afternoon or Wednesday afternoon, they are already 90% profitable, well, it serves you no purpose to stay in that trade until the Friday session. You would rather close the trade, get the buying power back, and maybe go shopping for another opportunity that has full premium inside of it. So hopefully all of that makes sense. And then in the event, if ever we get assigned the shares, guys, if ever the stock price goes below our strike and we have to buy the shares by the Friday close, thereafter, we're going to write covered calls to get out of the trade. Now, covered call rules is the same thing. We want to be targeting between 0.5% and 1% in weekly premium for those covered calls to make it worth it for our time. And then we want to be writing these covered calls at the assigned strike price. Let's say we get assigned Google shares at 162.5. The following week, we will write covered calls at 162.5 or one strike higher. The only time that I'll write one strike higher, guys, is let's say Google pulls down really hard into the Friday session down here, and we get assigned at 162.50. And then the following Monday, the stock just gaps up, right? 2% up day on the Monday morning, right into the 165. That is the only time where I might choose to write one strike higher and get a little bit more premium and a little bit more share appreciation. But for the most part, I would say that, 90+% of all my trades, I'm writing at the assigned strike price. So hopefully all of that makes sense. As I said, if you want a more detailed explanation, the link down below in the description will take you to my longer form video. So that being out of the way, guys, let's jump into the top 5 options plays of the week, and you'll see there are some fairly good ones. So let's move into stock number 1. Stock number 1 is going to be Google, for the simple reason that this stock is excessively cheap. And if you look at the longer term timeframes, guys, the bulls are looking to set up the monthly higher lows for some possible further trend continuation. I love Google, guys. The valuation of this stock is extremely cheap, and all of their lines of businesses are working, firing at all cylinders at a certain point, right? The PEG ratio right now is about a 1.2, 1.25. We did the valuation at 158. Now it's about $10 higher. So this PEG is about 1.2, 1.25. Still the cheapest stock out of all the Magnificent Seven. They've been kept down largely because of some the Department of Justice lawsuits that have been going on, but their business largely remains unaffected from those lawsuits at the current time. So I love Google, guys, in this lower 160 region. For now, we're going to take Google Obviously, there's 2 tickers for Google, so the expected move on this stock for the week, guys, is about the 162.7. So let's go shopping on Google and see whether or not we can find any premium below the 162.7. As we saw just prior, we do have enough premium at the 162.5 range, guys. 80 cents on the bid, which does respect our 0.5% rule. So Google, I'm looking to play this one aggressively, guys, just because I think that it's very, very cheap right now, and it's trailing the rest of some big tech names that have moved closer to their all-time highs. Google has kind of been a little bit left behind. So any dips opportunities, guys, into these moving averages right here, into our outstanding support levels at the 162 down about 158, does represent a great short-term opportunity to be writing some short puts. So the weekly trades I'll be looking for this week, guys, are either the 162.5 or in the event Monday and Tuesday morning, we get some dip opportunities. Let's say Google drops down into the 165, 164, 163. That will free up 1 strike lower in the 160 strike. So I'll be looking for one of these 2 strikes, guys, 162.5 or the 160. Now, obviously, guys, if Google has, let's say, a terrible day on Monday and drops 3-4% right away and blasts through the expected move, are we still going to write the 162.5s or the 160s? No, it'll be too close at that point, right? So we have to use a little bit of logic at that point. We'll be going even lower. Think the 158.5s or the 155s. So you have to be dynamic with this strategy. Depending on the size of the moves on Monday or Tuesday, we want to be writing as low as possible while still getting our 0.5% rule. So hopefully that makes sense for Google. Now, trade number 2, guys, is going to be one that I absolutely love, and that is going to be Square. We've been playing Square now on the channel for, the past couple of months running at this point, right? Why? Because it's in such a juicy area of long-term support. This is pretty much 2 years worth of support at this point, guys, right? $62, roughly all the way down to $52. I love playing Square in this level because the stock is extremely cheap right now. It only has a 0.41 PEG ratio. With crazy revenue growth and crazy EPS growth over the next couple of years, the company is now also net margin profitable and improving its fundamentals drastically over time. Look at this EPS expansion over the next few years. Look at this revenue expansion too. So I have no problem bidding Square down here, even though it is relatively low and has been kept low for a while. I like playing stocks when they're low, and the fundamentals have been improving over that time. Now, the expected move for Square this week is $64.26. So let's go shopping for some Square options and see, can we find some premium below that $64 mark? So let's go shopping. Now, looking into the premium, guys, as you can see, well, the $64 pay 44 cents. That is above 0.5%. 0.5% mental math. You guys remember the rule, right? Half of 64 is 32, so you need to see a minimum of 32 cents on the bid, which this one does respect. As a matter of fact, even the $63 strike has roughly 0.5%. I would not be opposed to making the play on the 63s either. Now, the best case scenario is if on Monday or Tuesday, we get a little bit of a dip on Square, coming down into the 66, maybe even 65, high 65 location. That is going to free up the 63s with a lot more premium, and maybe even the 62s or the 61s, depending on the size of the drop, right? Always be dynamic with the strike prices. We know there's big support down here, so the lower that Square goes early on in the week, the lower we'll be able to write our strike prices while still getting our 0.5%, guys. So I love this trade. Hopefully that makes sense for Square. Now, the third trade we're going to be looking at is a pair of semiconductor names, and number 1 is going to be ON Semiconductor. I've played this one a ton on the channel, guys, since October of last year, and the trade remains exactly the same. A huge support level for ON Semiconductor, and right now it's just the same. We are kind of pulling right back into it. So the expected move for ON Semiconductor this week is about 68.18. As you can see, that is the lower portion of our support boundary that we've established since the month of June. So let's go shopping for some ONs, guys, and see if we can find any premium down below there, below 68.18. So let's have a look on the options chain. And as you can see right here, guys, well, we get even some decent premium all the way down to 66, which is a decent ways away from the expected move, right? So this is definitely one of my preferred strikes, 66, and in the event ON falls on the Monday or Tuesday session down into 70, 69, well, you guys know the drill. We're going to be able to write even lower, possibly the 65s or maybe even the 64s. So the strikes that I like at a first glance right now, guys, is 66 all the way down to 64. I think it's a relatively easy trade for a solid company that's just been kind of stuck in this general location, but the fundamentals are quite good. And we know that even though semiconductors have been muted, they should be having a very good Q4. So I would not mind being assigned these shares at all. And trade number 2 for semiconductors, guys, is one of everybody's favorite plays, going to be Nvidia. So we know Nvidia has been on this very nice daily uptrend breakout and reacting beautifully from our area of confluence. This was a good area of support, right? Big area of support, 119 down to 114, and your moving averages are acting as confluence there as well. So I would not mind playing Nvidia if I can find some premium below the area of support down here, roughly around the 115, 114. For now, though, the expected move is 119.50. So let's go see if we can find some premium on Nvidia below that 119.50 mark. Usually Nvidia has some good volatility, so I would not be surprised if we can. Now, moving into this trade right here, well, we can see that the 0.5% rule only starts at about the 117, right? Half of 117 or half of 118 is roughly 59, 58. So we're getting about that on the bid right here for the 117s, but I want to get a little bit lower. So that being said, we need to see Nvidia have a tiny little dip here on the Monday or Tuesday session. We know that it can dip early on in the morning and then have a nice recovery thereafter, right? So what I'm looking for is a little dip on Monday or Tuesday morning, bring me back into the 123s, 122s, and that is probably going to free up a bit lower for Nvidia. Think maybe the 115s or the 114s. So I really like these two strikes right here. If you're a little bit more of an aggressive Nvidia bull, you can obviously do the 117s, 118s, but myself, preferably, I'd be looking to 116 to 114. And obviously, if Nvidia on the Monday or Tuesday has a very bad day, 3-4% to the downside, and we come back down into the 119, 118 into the expected move right away, that's going to free up even better premium, guys. Think the 112, 111, 110. So pretty much what I'm trying to say here is, depending on the size of a pullback on Nvidia, 115 or rather 116 down to 110 is my preferred strike range. So we have to be a little bit dynamic with our strike selection on this one. Hopefully that makes sense for Nvidia. And now the last trade, or before last trade we have, is going to be Uber. So I talked about this one last week as well. Uber is looking very good, guys. We have the weekly trend just looking to back test this area of support roughly around the $72 to about $68 range. This green box right here looking very good for that back test, right? So we're looking for essentially what we're looking for, guys, is the breakout, retest, and run trade. One of the setups that I like to look for, right? So the expected move for Uber right now is going to be 70.43, and that's exactly where I want to be. I want to be in this green box of support. So let's go shopping for Uber and see if we can find anything below there. Let's pull up the options chain real quick. Do I have it up here right now? Yes, I do. All right, perfect. Let me just get a quick little sip of coffee. And as you can see, guys, we're getting some decent premium, right? The expected move, 70.42. Look at the premium down here. Very, very nice, right? 68, you need to see half of that, which is 34. You get 35 cents on the bid right here. So Uber is offering some decent premium below the expected move, all the way down here at 68, which is your 200-day moving average. So I would really like that strike, guys. For this week, I would not be opposed to doing 69 all the way down to 67. Obviously, if Uber pulls back early Monday or Tuesday into maybe the 73, 72 area, that might even free up some better ones, such as the 67s or 66s. So essentially for me this week, it's going to be 68 all the way down to roughly 66, depending on the size of a pullback on Uber, targeting all the way down here, which gives us a very large cushion in relation to the expected move. So hopefully that trade makes sense for Uber. And now lastly, guys, we're going to be looking at the options play number 5, and that's going to be Charles Schwab. So we know that the banks have earnings coming up on the Friday session, as I've explained earlier, but Charles Schwab does not. That being said, Charles Schwab is in a great area of support right now. You can see it has been a decent area of support for the bulls in the past, resistance here as well, support, and now has been acting as support for virtually the past 2.5 months since they had their most recent earnings cycle. So that being said, guys, I really like playing this lower end of support on Schwab. Think of maybe the 62 down to 61s, right? The expected move for the week is 63.11. So let's go shopping on Charles Schwab and see if we can find anything lower than that. Pulling up the options chain right now. As we can see, guys, not so much premium on Charles Schwab because the stock is not too volatile. As a matter of fact, there is only some premium available at the 63s. So it stands to argue that if we want lower, we need to see a pullback on Charles Schwab. If Charles Schwab pulls back Monday or Tuesday into the 63 location, high 63s, low 63s, into the expected move, that is probably going to free up, guys, the 62 and the 61 strike. My preferred strike for Charles Schwab, I'll be honest with you guys, is 61. If we can pull back enough and free up some premium on the 61s, I'll remind you, you need to be looking for at least about 32 cents for that trade to make sense for you. So $61 is going to be my preferred strike in the event we have a little bit of a dip opportunity on the Monday or Tuesday session, looking to get a little bit of financials exposure, possibly prior to those earnings. But be careful with this one, right? If you do not want to play it, keep in mind there is earnings risk, indirect earnings risk. Charles Schwab does not have earnings, but in the event that the bank earnings are negative on the Friday session, this one may have a little bit more of a pullback than anticipated, which is why I want to be going super low with my strike if I can find it early on in the week. But I would be I'd be lying to you guys if I said that I like playing it closer to the 63s, right? There's just a little bit too much earnings risk. So we really need a heavy pullback to open up the 61 strike for Schwab. And that would be one that I'd be comfortable playing this current week. But I figured I should throw it out there nonetheless because it is in a very good area of support. That's pretty much it for our top 5 options plays. Now for the bonus plays. So I won't be giving you guys the expected moves. I'll just be giving you guys a very quick rundown of all the bonus plays that I like playing, right? The top 5 options plays list are plays that are, for all intents and purposes, pretty much ready right now. The bonus plays are plays that I keep on a back burner, I keep on the watch list because they're almost ready. And if they come down a little bit more, they will be ready. So keep your eye on these. So some of those plays are going to be Amazon. So Amazon not looking too bad at all. If Amazon pulls back here, guys, a little bit further, closer to 180, I love that strike, guys. 180, 177.5 for Amazon. I will be playing that one a little bit more heavier. Love this company, decent valuation, and I think they're going to absolutely crush it for the next 3 to 6 months. The second play is going to be Enphase. Solar play should respond well to further rate cuts, and we are coming into the lower end of our big range of support. Enphase usually has some great volatility, so I'd not be surprised if on the Monday session, if we pull back a little bit, you may even be able to find some premium at the $96, $95 strike, which is pretty much crushed for Enphase. That is the lower end of all these wicks down here. I would not be opposed to playing that one, but it's a little bit more risky than other stocks on the list, of course. The third trade is going to be TLT. We know that 20-year bonds have been crushed as of recently, just because there's been some repricing away from the hard landing scenario into the soft landing scenario. But I think that this area, guys, is juicy weekly support. As you can see, a highly contested area prior in the year, and this time should be no different. So looking at some short puts, guys, 95, 94 even for TLT will be a fairly decent bet in my humble opinion. Rates are going to come down, guys. Whether or not we go into a hard or soft landing recession, the rates will be coming down, and these bonds or the 20-year yields will be coming down, and this trade should probably just grind higher over time as we move further and further into the rate cut cycle. So I don't think there's a lot of risk on this trade down here at the lower 94s, 95s, so wouldn't even mind being assigned and just riding this one a little bit higher. The other trade we're going to be looking at, guys, is UPS. UPS coming into one of my favorite areas. Again, you guys know I've been talking about this one a lot on the channel ever since they had their last earnings in July. We're now coming back into this big area of support, and any further weakness in UPS could free up some of my preferred strike prices, 127 down to about 125. So keep that one on a watch list. Now, these trades are going to happen after earnings, guys. So these are the banks, right? If bank earnings come out on the Friday session and are received in a negative fashion, it's going to free up some very, very juicy trades on some of these following names, right? Bank of America. If banking earnings are negative, keep in mind Bank of America reports next Tuesday, but this one is still going to be on my list for Friday. If we get some volatility into this area right here after bank earnings on Friday, right? Only look to take these plays after Friday earnings if the stocks come down. I'll be looking for some Bank of America puts into the week of earnings. Yes, I'm willing to take the risk into the 37, 36 area. The other one is going to be Wells Fargo. They do report on the Friday session. If we get weakness out of Wells Fargo earnings, guys, I will be looking to make some short put trades down here in the 52 location. Very nice area, guys, of long-term support. You can see it right there. Was a big area of congestion, resistance for a while in the markets. Now, if they backtest it, it will be support. So I like this 52 down to 50 area for Wells Fargo. After earnings only, not before, right? Now, the other trade we're going to be looking into is Bitcoin, BITX. Not too bad of a trade at all, but keep in mind, this is a 2 times leverage ETF, so it fluctuates a lot more than Bitcoin. That being said, I like playing BITX just because Bitcoin, it does look like it wants to be. Let me just pull up the chart for Bitcoin so it makes sense, right? So let me just pull it up. So Bitcoin, what we're looking for here, guys, is we're looking for the weekly higher lows into a possible further leg of upside if the markets remain bullish. Look at the weekly MACD, guys, starting to point in a bullish direction after being down pretty much since the month of April. Nice engulfing move, retest, and possible run, right? So the breakout, retest, and run trade is the reason I like BITX, which is also why this one has, my attention. It has a lot of volatility and the premiums are usually quite good, but be careful, it's 2 times leverage. I like to go $24 and below. These areas down here coincide with 58,000 on Bitcoin, so I would be a dip buyer in that opportunity, which is why I like playing it down there. Another trade to consider is possibly OXY. OXY has been having a great rally recovery with the oil trades recently, and we're now coming back above our area of which it was support, now it's resistance, and we are trying to clear it, right? In the event we get rejected, however, and we have a little bit of a pullback real quick, this will be looking for, right, the nice daily upswing right here, engulfing move, looking for the higher low for daily trend expansion. Any pullbacks in OXY could be tempted to make some short put trades around the $52, $53 range, so keep an eye out for that one. Another trade I'll be looking for, guys, almost ready, but not quite, is NVO. We know that healthcare as a whole has been pulling back quite considerably over the last 1 month worth of time, but it's not looking too bad, guys. This is literally looking for a monthly higher low setup for further trend continuation. The weekly also is pulling into a decent area of support, which you can see best on the daily, right? Prior resistance, current support level, not looking too bad. In the event we fall a little bit more, guys, NVO will probably also fall a little bit more, but look, we're coming into daily oversold conditions on NVO. That has not happened, guys, for a considerable amount of time. As a matter of fact, since August of 2022 and September of 2022, and usually when the NVO hits daily oversold support levels, we usually start getting a little bit of upside moves in the stock. So that is what I'm looking for here, guys. In the event NVO falls a little bit more with the healthcare sector, I will be targeting some short put trades around this level right here, guys. 110, 109 is going to be my desired strike price. They're almost ready. 1-2 more days of red should do it, hitting us into big daily oversold conditions. I'll be looking for some short put trades right there. And now lastly, guys, the other one that I wanted to show you is Pepsi. So Pepsi has earnings on the Tuesday session. This will once again be an after earnings play. They report earnings Monday before the open, right? So after Pepsi's earnings on the Tuesday session, sorry, I said Monday, it's Tuesday. So after the Tuesday session, if Pepsi falls down and comes down into the lower 162 range, right? This is the area I love playing Pepsi, guys. Target the following strike, 162.50. 162.50 is literally the bottom end of this range. If we pull down hard into it, I am going to take this trade as a whole on Pepsi. I think it's a beautiful support range. Every single time I've made this trade in the past roughly, let's call it 1 year's worth, I've always made some very decent money, guys. I've got assigned a few times, but every time we usually have a nice little bounce. The 200 weekly moving average is there on Pepsi, and usually every time we test that 200 weekly, except for COVID, usually we get a nice pop reaction from it. So that's going to be a trade I'm looking for a post earnings play on the Tuesday session. So that's pretty much everything I had for you guys today. It's been a fairly good week of trading as well with the Discord members, guys, where I give all of these trades live, right? So I know I threw a lot of plays at you guys right now, but if you want to follow along live with me, guys, with our community members, the link is always down below in the description. We do have a lot of these wheel trades, but I also do a lot of long call setups as well, debit spreads, share trades. There's something for everybody, and last week was a fairly good week as well. Most of all our, well, actually all of our wheel trades won. We only got assigned one position, which was on new holdings, but that one should be doing fairly good in the upcoming weeks as well. So if you're interested in joining the Discord and getting all of these trades live, The link is obviously down below in the description. And for anything else, well, always consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every single Sunday in preparation for the upcoming week. And we also do the Monday through Friday daily market recaps after the close. So hope to see you in some videos in the future. And lastly, guys, if you have any questions at all on the strategy, please leave them down below in the comment section, and I will be very, very happy to answer you. Anything you want, if you want a second opinion on an options trade, I can answer that too for you. So take care, guys. I'll see you tomorrow after the close for our daily market recap. Have a very beautiful week of trading coming up. Take care and peace.